InvestaFest 2022 is brought to you by these major partners: ATRAM, To Trade Asia, and these other partners. Do not forget to share your experience and learning on social media. Use our official hashtag InvestaFest 2022.
The ATRAM Alpha Opportunity Fund Incorporated has one mission: to look for the winners of tomorrow. The fund actively finds the fastest growing Philippine companies with high quality management and sound business strategies. This growth has often translated to higher stock prices. The fund has a proven track record of selecting companies outside the Philippine Stock Exchange Index that were eventually included in major indices, while most funds in the market stay within the Philippines' top 30 companies. This has led the fund to consistently outperform the market in the long term. Furthermore, the fund invests in long-term drivers of growth that could provide significant gains for investors, such as technological advancement, tourism, infrastructure, and sustainability. Invest in the potential of the best growth stories the Philippines has to offer. Invest in the ATRAM Alpha Opportunity Fund Incorporated. For more information, visit www.atram.com.ph.
Mr. Hagedorn is the Chief Investment Officer of the ATRAM Group, responsible for the overall management and administration of the investments team. He has 30 years of experience in equities and asset management. Mr. Hagedorn oversees the investments team comprised of 23 members spanning the roles of portfolio managers, analysts, and dealers across different asset classes. So without further ado, I would like to give the floor to one of our keynote speakers for the InvestaFest 2022, Mr. Phillip Hagedorn.
What's up mga ka-Investa? Welcome to InvestaFest 2022. We have another interview session. I will be your host for today, and our very special guest is Sir Phillip Hagedorn. Sir Phillip, how are you doing today?
Hey Renzo, good to see you. I'm doing well, thank you.
Thank you so much for being here, for talking to our audience and interacting with us. So I just have a few questions, and we'll be talking a lot about the market outlook for 2022. So maybe to begin, and for our audience to get to know you more, Sir Phillip, can I ask for a quick maybe overview of your background? What do you do, and how did you end up here?
Good question. Thank you, Renzo. Thank you for having us as well this afternoon. Really appreciate it and really congratulate you guys for this great InvestaFest. I was born in the Philippines in 1966. I am a third generation stockbroker. So my family has always been in the stock brokerage business. My grandfather started a stock brokerage firm and was a member of the Manila Stock Exchange. My father took over that business in the early 80s, and I eventually joined the brokerage firm when I finished college in 1989. So stocks is kind of in my blood. I've been buying stocks as far back as I can remember, actually. Really, the first company I ever owned was San Miguel. Back then, it was like the number one stock in the in the market. I remember the thing I remember most about owning stocks was when the dividend checks arrived. I don't know why. I guess at that age, it's not real until you see the cash, right? So I saw the cash in the dividend checks, and I always enjoyed that part of investing. So you can say I've been doing it pretty much all my life, investing in the markets.
That's pretty cool. So what made you interested? Although I know you are, like what you said, you were born in the industry. What made you really decide, this is something that I want to do? I want to be investing. I want to be in the finance world.
Well, I think, for me, it was about the opportunity to really grow in the industry, right? Because as a broker, and even the early years of asset management for me, it was very much a relationship with institutions, right? My clients were foreign brokerage houses, foreign fund managers, the local institutions, local corporates, never really the individual investor. And all my life growing up, all I could hear about from my father and many people in business was how the Philippines had this fantastic demographic dividend that was going to pay, which is a very young population, right? And very early in my career as a broker, I already was trying to transition our firm at that time from a pure institutional brokerage house to a more retail brokerage house. We actually, when I was head of sales, we opened up branches from Baguio all the way to Davao, um, Lucena, uh, Cabanatuan. I mean, we had branches pretty much in many of the um, cities in the country, trying to really build up the retail business, no, the retail brokerage business. But it was too early. Parang the demographic dividend. The problem with the demographic dividend back then, guys, probably your age, Renzo, was you were still in school. You weren't earning any money yet, right? And so that huge population of young people were still getting educated. The difference today is that huge population of young people are starting to work, are starting to become productive members of society. And so, you know, my passion in the industry is really bringing it down to the retail market, getting everybody invested. You know, not just big institutions with a lot of money, but if you look at most developed countries around the world, the retail market plays a massive role in financial markets, right? They actually drive the way markets move, whether by investing directly in stocks or investing in funds. So to me, the dividend is now paying off. We see it. The volume in the exchange, more than 50% is retail.
Mm.
That's never, in my 30 plus years in the market, you know, that was never the case. Never the case. Today, it's a force. And the demand for this service is going to go up. Quality of product, the quality of investment outlets, the diversification requirement that you can invest globally, not just locally. You know, all of that is happening now. Non-traditional assets like Bitcoin and things like that, you need to include all of that in the plan, and and not for institutions, but for the general regular investor.
All right, that's pretty cool, and I'm really surprised that that's how many. At least that's the disparity between the retail investors and the institutional investors as compared to way back then. So I guess that's a good sign, right?
Oh, it's absolutely a great sign. And that's one of the reasons why this market is not, okay, we've struggled a little bit in the last couple of years, understandably. But the support, you've seen the foreign outflow, but the market is up, from the low. If you were lucky enough to be able to buy, let's say in the second quarter of 2020, when things were still bad, but it looked like it wasn't going to be the end of the world, right? That we were going to survive this. You have 2 years of 16% returns, right? With a significant volatility all over the place on the way there. But
Yes.
that market was brought up by locals, not foreign, not foreign investors, and primarily institutional and individual investors alike.
That's cool. All right, so I like to go into, I guess, how you do your investment decisions. What's your investment methodology? So maybe can we go back to what you said earlier about your first stock, SMC? So why did you buy San Miguel Corporation back then?
Well, because my dad told me to. I mean, when you're that age, I wasn't doing research, right? But one of the first rules for me is if you want to buy a stock in a company, it's because you want to be a shareholder of the company, right? I don't buy a stock because tataas yan bukas o magbe-break out siya. I mean, of course, you can trade, and I'm not saying there's no tactics to do that. But generally, when I buy a stock, it's because I want to be a shareholder. So I have a little bit more of a longer term view of owning a stock. I'm not a big churner, so to speak. Um, Although the Philippine market requires you to be very active because it is extremely volatile. That 16% per annum. I have it in the chart here from March of 2020 to March of this year. That's about 28+%, I think. No, more than 29% from the period, about 16% per annum. There, that you know, that came with volatile periods where you could have lost 20%. If you sold at the wrong time, or made much more than 16% per annum if you bought at the right time. And to me, that's why you need to be active, because the long-term trend might be intact, that we're recovering and we're growing, etc. But in the intermittent, you're going to get these big movements where you need to be active. And so active management is super important for the Philippine market, number one. But for the core part of your portfolio, as long as the main trend is there, I wouldn't be selling everything. You know what I mean? You probably top off your game, sell 20% when they tops off, so you can be a bit active. But it's not an all in, all out, all in, all out game, because the long term is going to be extremely positive for the Philippines. You cannot beat this demographic dividend. You cannot, no matter who's the president, this is a tidal wave that's coming, that's going to benefit all as long as things are run in a normal way, right? So why I bought San Miguel? Well, somebody told me, a professional told me to do so. That's normally the first reason why you do it. But like the company, you understand it. I mean, one of the stories I always say is when the cell phone first came out, you should have bought PLDT, because, or if you look at all of your gadgets and they're all Apple, well, shouldn't you own a little bit of that stock? If you open your fridge and you see that it's full of URC and Mondanisan and whoever else, Century Pacific products, that you're so loyal to, why not be a shareholder? And that's kind of the way I look at it.
Yeah, that makes a lot of sense, and I really like how, well, not really basic, but it makes sense in a business perspective, because if it's a good business, you're saying that it's a good stock as well, right?
Yeah, I don't think you need to be a Uber analyst to tell somebody they have a good product, right? If you have a good sense and you see this as a great product that the company is likely to make a lot of money with, then you should consider being a shareholder, right? I mean, if you can, if you have the opportunity to. So I kind of take the same approach. The nice thing about the stock market is the minute you're disappointed with something, you can sell on any day. It's not like if you get into business with your friend and put up a restaurant and then suddenly you don't like something. Na, ipit ka na dyan, di ba? You're stuck, man, as they say. The stock market is freedom, right? You can come in and out when you want, but you need to have a process. That's the most important. Walang chamba-chamba. You have to have a process. You have to believe in your process. And if your process works, then stick with it. If your process doesn't work, tweak it to find the right process. But have a plan, have a process. This is not a show up in the morning, put it on black and red or red, spin the wheel, bahala na what happens, then wait for the next morning. That's not how you make money in the market. Have a process, follow your process, It'll grow with you. You know, you don't have to be a professional. You in time, your process will adjust to what you like, how it works. Don't give up because you're gonna lose. You know, you're not gonna get everything right. You know, and continue building, and you'll get there. You know, people will get there.
All right. So, speaking about the process, I'm sure a lot of people here are newbies or just starting out with the markets. Do you have any specific, I guess, strategy, or what are the things that you would like the new investors here to be doing when it comes to investing in the stock market?
Yeah, I mean, I think you have to do some homework. Number one, right? Like anything else, if a friend of yours told you you want to invest in a business together, you're not going to just blindly do it, right? You only blindly do it if a professional is giving you the advice, and okay, you understand it, you feel you don't have to give a lot of effort in terms of research, then fine. Then I think you can take the advice. Look for those um, coaches. Look for those people that you can rely on to give you advice that are consistent, that are in line with your thinking. Um, I think there's many people out there that are sharing ideas. Some great, some not so good. But in the end of the day, see what works for you. I don't think there's a one size fits all. But you need to do some work, and that's part of the process, right? So if there's a company you like and you want to research, I'm sure they have a website, I'm sure they have an annual report. Just understand it a little bit. It doesn't take a long time, you know and and sometimes you don't have to read a lot. I mean, it's just really, it might be a very obvious company, somebody that's very familiar, but it's become a good idea for the meantime, right? Or for the moment. So, but do some work. Don't just buy something because somebody said so, unless that somebody is somebody you really trust, and that's their job to give you that advice. Um, then I think you can take some advice in a somewhat blind fashion, right? Um, um, but it's well, I'm free lunch. I mean, you can get lucky a couple of times. That will happen for sure. You need a little bit of luck sometimes also. Um, but you can eliminate a lot of the risk if you just do a little bit of work, understanding what you're buying before you do. I mean, I don't want to get into deep sort of valuation ratios. You scare people away if I start talking about PEs and book value and what it should be, what it shouldn't be. Um, Look at a price chart. Understand what that looks like because it's all there. That price chart is the history of the stock, right? And you know what's the number one rule? Buy low, sell high, right? That's like the number one rule in the market. So before you buy something and somebody gives you an idea, have a look at the chart. Maybe if it's like a rocket ship and you're telling them to buy it at the top of the rocket ship, you might think twice about it. But if it hasn't moved, then it's interesting. Why are you telling me to buy this, right? And so, there's so much of this that was never available. And when I was growing up, to find a chart of something, you had to do it yourself with math paper. I mean, there was no Bloomberg where I can just print out whatever I want to print out in 30 seconds or 20 seconds, man. There wasn't any of that. So nowadays, there's so many platforms that you can get this information. There's no excuse not to do a little bit of homework before you dive in.
That's right. So do your homework. And I like how you've mentioned a lot about fundamentals, of course, when you do your homework research about the company, the valuations and stuff. But you also took a bit of you also mentioned looking at the charts. So talking about technical analysis here. So for newbies, what would you like them to focus on, or what would be, let's say, the ratio between fundamentals
The
and
way I look at
technicals?
it, for me, fundamentals is why I buy a company. Technicals is when.
Mm-hmm.
Okay, that's how I like to combine it. So at ATRAM, we have scorecards for pretty much everything. That's how we keep track. We have fundamental scorecards. We have environmental scorecards, we have credit scorecards, we have technical, quant, even factor-based scorecards, sustainability scorecards. So we're putting together all of this data, and to help us construct portfolios for certain goals, right? Not every portfolio is the same. You might have a different risk metric or different goal for portfolio A versus portfolio B. But the basis of all of that is the data that you collect when doing the research and organizing it in a fashion where you can pull what you need to pull whenever you need to pull it to understand whatever you need to understand. Because if you only look at a company from one side, you might be missing something super important that will kill you later on, right? Especially nowadays when it comes to sustainability, ESG, all of these factors, right? So to us, it's to have a 360 view of the company along different factors to be able to understand and make a decision as to what to do with the company, whether to own it or not to own it. I like technicals because they don't lie to you, right? Technicals is the price, and it is the price. It's supposed to capture everything of the stock in that price. All the news of the day is in that price, right? Inside info is in the price. No inside info is in the price. So what technicals do is give you a sense of where it might move tomorrow or the day after or next week or next month. And that gives you a sense of whether the timing, which is a super important aspect of investing, is correct today or tomorrow or when. Right? It gives you a bit of a sense of that. But it is not why I buy a stock. I don't look at the breakout. Oh, something, ascending triangle, breakout. Bili natin. People do that. I'm not saying it's not a bad strategy. That's a tactic you want to use. But for us, we don't do that because we're longer term investors. And what we will say is, we like a stock, there's an ascending triangle. Hell, we better complete the buying before this thing breaks out. That's how we would use technical analysis. Right?
All right. All right. That's great. So I hope that the audience understood that, because sometimes people like to focus on technicals only, and other people tend to look at the fundamentals only. So it's good to have a mix of both. Yeah. Thank you for that, sir. So my next question, since we've already gone through, how your methodology is, or at least the iceberg of how you do your investing decisions, maybe we can go into the more outlook. What do you think is happening to the markets, to the economy right now? So I guess my first question is, how heavily do you think the Philippine markets would be affected if the US markets were to continue to trend lower?
Well, the last 2 years, the US market has been on a rocket ship, right? And we weren't
Yeah.
on it. So if they're going to tank, why should we be on it as well? Diba? There is impact. I'm not saying there's no impact, obviously. I mean, obviously, the war in Ukraine is scaring the pants off of people. And if you look at the way prices have moved over the last few days, I know we're taping this a bit early, but there is massive dislocation, right? I mean, oil price hit 130, and I think it's back to 100 today, right? Nickel had to stop trading. So there's a lot of confusion, and that's the worst time to be super active in the market, right? If you're in the market at that time, just remain calm, wait for things to settle down, because I don't think the worst case scenario of a World War III is in the books. As a matter of fact, in the last 24 hours, the rhetoric has been a lot more about de-escalation rather than escalation. And that's why, last night you had a 7% run up in European equities, right? In one day. I mean, that's not a dead cat bounce. I think There is impact in the short term for sure because of some nervousness, panicky investors getting out, etc. Um, but look at where we are. We're still at 71, 7,200, right? As of today. Um, and, we're still up year to date. We're like one of the few markets that's still up year to date. If you look at developed markets, they're down 15, 16, 18%. Europe was down before the recovery of last night, was down over 20%. So we've done okay this year, as a matter of fact. If you only had Philippine equities versus the rest of the world, you've done pretty well, actually. The question is, what's the opportunity, I think, and what's the next step? Because while the whole world is concerned about Ukraine and worried about inflation and worried about commodity prices, which will have some impact in the Philippines is actually opening up our economy for the first time in 2 years, right? We're finally moving back to a more normal situation. Our mobility is finally moving back to a more normal situation. Construction, property, the malls will finally be coming back to a more normal situation. These are low-hanging fruit for earnings, right? SM Prime, typical example, 70% of the income comes from the malls. What do you think they're going to do this year versus last year, right? I mean, last year there was nobody in the malls. This year, for probably 8, 9, 10 months, they're going to be pretty full, right? And so, these are the opportunities that are in front of us. Ironically, as well, the last 2 weeks or so has been the full year 2021 reporting period of the companies, right? So they've reported their full year earnings of 2021. The number that they're reporting on aggregate and individually also for some companies is blowing away. Let me repeat that. Blowing away the forecast of analysts of last year. The companies are making way more money than people thought. Okay. And that momentum should continue. We hope. I mean, I don't think this war in Ukraine is going to change that momentum. It's certainly going to cause inflation and prices are going to be more expensive. Fuel cost is more expensive. But how do you balance that with somebody that's been stuck at home for the last 2 years and wants to move around now? You're not going to buy gas or get 70 or 60 pesos per liter. You're going to probably buy the gas, you know what I mean, and go around. I mean, so this is what I'm optimistic about, is I think that, we have an opportunity that I didn't think we would have, that we would have the market at 7,200 this late in the year, especially because the earnings are coming in, well above where most people thought they would be, setting the stage for good momentum. I don't think the January lockdown will impact the outlook. Our Omicron people have forgotten about COVID, I think, in the last 2-3 weeks. You don't really hear about the talk so much. So the issue now is, how bad can it get with this Ukraine? How bad can the energy crisis? There is no energy crisis also. Right now, there is just a problem of price. There is no supply crunch, right? And that can be solved quite quickly if there's a de-escalation in the problem in Europe. And oil is a perfect example. If you see where it's come back to so quickly, that can happen to many other commodities. And if it does happen within the next 3-4 weeks, the impact of inflation is going to be negligible, right? And the focus will be on, what are these companies going to do, and what are their earnings going to be like for this year? So we maintain our forecast of around 8,600 target for the index on the back of an earnings recovery. My only caveat to that is, if there's a re-escalation in the problem and it expands beyond just the borders of Ukraine, then I think all bets are off. But from what we're seeing now, And overnight, it seems like it's heading in the, knock on wood, the right direction.
Right. I think that makes a lot of sense. Although we have seen a lot of sell downs in the previous days prior to this conversation. So what would you advise to investors right now when crises are happening, a lot of uncertainty is up there in the news? Is it Would you recommend people to like lighten their load when it comes to how much they're
Well, the
invested?
problem with that now is I think it's too late. If you didn't anticipate a little bit of this, and let me be clear, even for our strategies, if we're gonna prepare for some volatility, it does not mean selling everything. Okay, we raise cash levels, maybe 10, 15%. That's good enough to act on these drawdowns, right? The problem is if we don't have cash in the drawdown, then the only way to rebalance is sell something to buy something else. But then the difference is is what I'm buying going to make money faster than recovery of what I just sold? You're stuck with those decisions. So what we do is try to anticipate there's going to be problems. We saw this thing. We certainly didn't think it was going to be a full blown out invasion the way it happened, but we entered into the situation with caution. For example, our global multi asset strategies, um, since the beginning of the year, have been neutral to underweight, now underweight global equities, but overweight Philippine equities. And we've been underweight Philippine and global fixed income. So, well positioned for this. But the impact is still a negative year to date return, albeit much smaller than what it would be if we were neutral all of those asset classes, right? So, um, you need to be able to anticipate a little bit and hedge. If you think it's going to happen, take some money off the table, but don't act abruptly and like sell everything, then buy everything back. To me, that's that's what we avoid trying to do. Um, yeah. So hold on, get some water. Excuse me.
No problem. All right. Okay. That makes a lot of sense. So maybe my next question, you mentioned earlier about the opportunities looking forward. Of course, you are very optimistic, or at least looking at the brighter side of things, especially for the investment side. So, when we reopen, what are the industries that you are looking into? What are you gonna be focusing on when the Philippine economy fully reopens?
Okay. Okay. Our largest sort of overweight in terms of adding assets to versus benchmark is the discretionary spending space. Okay. Um, and I have to admit, I think it's a little early still, but this place has a lot of value. This space has a lot of value. These companies are just coming back to full capacity, to opening up. Um, and, uh, it's been proven from last year, especially the fourth quarter of last year, that Filipino discretionary spending is still strong. People still have cash and they're getting back to work. So that means this is going to continue. The peso has been a little bit weak, which means OFW remittances will get a bit of a boost, right? There'll be a bit of extra cash for those receiving OFW remittances, which is a real anchor to our consumer spending story. So, from an active risk standpoint, we like a lot of these companies that are in the consumer discretionary space. Um, but if you were to look at where our large AUM is bet, it's still property and banks in the end of the day. Um, And although we're not extremely overweight versus benchmark, because in the benchmark, property companies is about 20% of the benchmark, we're probably slightly over 20% lang. Um, while the banks is also another 20%, and we're probably neutral with the banks. But within the space, there are companies that we like that are significantly overweight. No? Um, but property and banks, the income of property and banks really drives where the index is going to go because they're such a big part. And don't forget the holding companies that own them make up another 40% of the index. So between the property, the banks, and the holding companies that own them, you're talking about 70, 80% of the index earnings. No? And that's why they're so important, those sectors for the Philippines, because it will drive where the market will go, or where the index will go at least.
All right. All right. Thank you for that. So let me ask a few more questions about the Philippine economy. So how about the looming presidential elections? Is this something that you are looking into? How can this affect our economy, our stock market? What's your insight, sir?
Well, I've experienced, how many elections? Ramos, Erap, Gloria Macapagal
Wow.
Arroyo, uh, Pinoy, and Duterte. No? So
Yes.
5 presidents in my 30 years of working in the markets. And, you know, when I started working, the index was 800. The index is now 8,000, right? Or 9,000, hit a high of 9,000. It went up 10 times, notwithstanding what president was in the way of that. Because although politics matters, and it certainly does matter, policy for Philippines hasn't changed that much, right? I mean, we're a we're an well, we're not that open actually. We were quite a closed economy. We were very difficult for foreigners to invest in the country, right? Cannot buy land. There are many industries that were prohibited, etc. That started to open up in the 90s, right? The government started to privatize businesses. There was deregulation. Um, then we got hit by the Asian financial crisis. We still survived that. Our currency lost 50%, but the market, a few years after the crisis, recovered. Then we had the global financial crisis. We had a lot of volatility, but we recovered very quickly from that. And the government, if I looked at it like a business, was pretty bankrupt back in the late 80s, early 90s. We didn't have money. We had to think about this. Your budget, all of your sueldo went to paying your bank, the interest. You had no money to invest in the stocks, let's say, for example, as an individual. That was what the country was like. You were getting a sueldo because we were collecting tax, but all of that disappeared to cost. Walang investment, no growth. The only time investment started was when Pinoy became president. It took those 20 years of reform, crisis, reform, opening up taxes, VAT, all of this stuff that the presidents before Pinoy did to set the foundation of the economy to now start investing. And when we started to invest, GDP went from 3% growth to 6. And the stock market went from 2,000 to 8,000. Diba? Our economy went from $30 billion to $400 billion in size. So whoever says that the country's gone downhill, to me, I don't know what they're talking about. It's, what numbers are you talking about? Because we haven't been as wealthy as we are today. Even per capita income went from 1,500 to over 3,000, 4,000, right? So the fact is, Filipinos are better off today than they've ever been. The country has reserves like we didn't even have reserves back then, right? We have $100 billion in reserves plus today. So the custodian of the government for 6 years, really, what can you do in 6 years to change things, right? I mean, if you were drastic and super aggressive and out of this box, like our current president, it hasn't. I mean, we've dealt with things, but the economy grew even under him, right? Even under all the rhetoric. What they've done, passing the new tax laws, what they've done, passing the new investment laws, allowing for more foreign ownership. Nobody talks about that. That's huge. That's going to open up the door for more foreign investment to come to the country. So, to me, that's the stage. That timing is the second question. Is it better to buy a market at 9,000 or at 7,200? Right? I mean, we are at a level we were first in 2014, if I'm not mistaken, or 15. Baka when we broke the 7,000 level, 2013, if I'm not mistaken. We're still there. And the companies have grown much bigger. The earnings is much bigger. So the sentiment has to get positive, and that will change. I don't think the new president, whoever she or he is, to me, policy, we're going to want to know what policy is because we're coming out of a crisis. There's no better time to buy a market than after a crisis, right? We all know that. 2004, 2010, maybe now, right? Maybe now. And that's a beginning of, you're talking about multi-year rallies, right? Not just one up year, one down year, but 1, 2, 3 years of double-digit returns, above normal returns. Always starts after a crisis. As long as we don't break anything. And the beauty of this crisis is we didn't break anything. We just closed the shop. You know what I mean? We just closed the shop. And hopefully when we open the shop, things are not so broken that they can get back on track quickly. Diba? That's where we are. And that's why I'm confident we can do this, we can recover very quickly. Let's get the noise of this crisis out of the way that we're in right now, this war, and focus back on fundamentals. And I think people will see a lot of value in this market.
All right. So instead of focusing more on like the presidential elections, who's gonna win, what's gonna happen, maybe we can just focus on like the economy.
No control over who's going to win.
Yeah.
Only thing we can do is vote.
Correct.
Vote whatever you think you should do. It's quite an exciting race. Philippines, we always love elections. It's a national pastime of ours, right? And I think, this is going to be an exciting one. I just hope that the winner is clear and that there's no, the last time these two candidates went up against each other, there was a long drawn out complaint. I hope we don't see that now, and there's just a winner and people accept it and we're able to move on. That's the most important.
Correct. All right. Thank you for that. So, moving on with that, maybe to add, so since we are also talking about foreign investments, maybe moving forward, let's say after this presidential elections, what could help the Philippine market attract more foreign investors to invest in the Philippines?
To me, it's all about earnings in the end of the day, right? Foreign investors want to invest in companies that are growing in the end of the day. And if you look at what happened when the pandemic hit, many corporates held back on spending, right? They said, hey, I better not, let's hold off on our capex, let's think about this again. We don't know when we're going to come out of this, et cetera, et cetera. And if you espouse that, you're not going to attract a lot of investors, right? Because, hey, there's no visibility about earnings. There's no visibility about what your growth is going to look like. But the minute you start talking about investments again and capex again, that interests people. And that's where we are now. we're seeing capex plans from corporates go way higher than where they were in the last 2 years. I don't think the last week of activities has changed anything at the moment. Um, and we'll have to watch that for the next few weeks to make sure that we can move away from this crisis that we're in. But if the plans continue, then it's going to be a good year for companies investing, growing, building more capacity, hiring more people. I think that's where we're coming back to. So for foreign investors, it's that, right? They want to see that companies are growing again. There's a more passive foreign investor also that really, they're global fund managers and they have an X% in the Philippines, and they have to decide whether they go overweight or underweight, etc. At the moment, I think most people are on the standby mode, waiting to see about elections. There's no real urgency to buy the markets because all markets are under turmoil. But we did see inflows already since October of last year. So when you see those, the analogy is this wildebeest that cross rivers in Africa, right? The huge herds. I mean, you don't see the first or second guy that cross, right? They cross like a few weeks before everybody else crosses, and I think there's been a few investors that have crossed that river and come into the Philippines already. It's not the herd yet. But certainly you need the first two to cross before everybody else does.
All right.
And you want to
Thank you
make
for
sure you're not in the
Yeah.
back of the herd.
that. That's right. All right. Thank you for that. So maybe I'll move a little bit backwards because earlier we talked about commodity prices surging and going down, and I don't know what's your view on the commodity sector right now, Sir Philip?
Yeah, I mean, I think commodities have been one of the worst performing asset classes for the last 10 years. If you look back that long, only in the last 2 years have we seen it at the top of the league tables in terms of performance versus different asset classes, global equities, local equities, Asian equities, etc. And so we are seeing a resurgence of it. Initially, because of the pandemic, right? Initially, the surge in inflation was bottlenecks because trade lines were starting to open up again, etc. Um, and that was the reason for the inflation. But that reason was already kind of dying off after January, February. I think that was a very big narrative in the last quarter of last year. But people were already saying, well, inflation in the second half of this year is going to be less than the first half, right? Before the Ukraine problem. When Ukraine problem hit, it brought back that inflation story, right? And we have to separate, I think, the broader global issue versus the Philippine issue. Because in the Philippines, the fear is obviously oil, number one. But we've lived with higher oil prices in the past. This is not something we haven't seen before. So to me, and then the impact on potentially food, right? Which is even a bigger part of our basket. For oil, number one is it all depends on how long the price of oil stays at the higher levels. If it was a blip of even 1 week at $120 a barrel, it would be irrelevant to inflation. If it did correct back to 90 or 100, the forecast that people have this year, which is, I'd say, closer to $90 a barrel is where forecasts are for Philippine, at least from what we've seen. And the way markets have moved now, that oil is correcting, my sense is that blip will not impact inflation. if we ended up in a situation where there was a protracted war and it became an energy crisis, in other words, the last time we saw maybe something like this was in the 70s when OPEC turned off the pump, right? They said, we're not sending you any more oil for 1 year. That's an oil crisis. Russia has the ability to do that to Europe, not to the Philippines, because we don't buy our oil from Russia. But the impact for the Philippines is not a supply crunch, it's a price issue. It's just going to be very expensive. That's the problem. Now, um, what is our outlook? Our outlook is we're not going to change our assumptions for another 30 days. We're going to give 30 days to see if de-escalation can happen. And if de-escalation happens, then the view is likely to be inflation slightly below 4% this year for the Philippines, with potential for food inflation, hitting us a little bit in the second half. Because the food inflation impact is going to come because of fertilizer. We don't import wheat. We're not a big wheat importer, which is what Ukraine produces. Um, they produce a lot of corn, which is used in feed, so the feeds for pork, etc. And we eat a lot of pork, so there's an impact on the pork price. Um, but fertilizer is key because fertilizer for rice is used, etc. Um, but we have a lot of supply of rice. So if the price hike is just temporary, by the time our supply is dwindling, we'll hopefully be able to buy rice again at a normal price, not at the price of today. So these are the factors that we're looking at to say we're not, we will see higher inflation than what we'd like to see, but will it be to the point where it's going to change the game? No, we don't think so. So, at the higher end of 3, maybe into the 4% range on average is likely. Might we see it at 4.5, 4.8 in the first quarter? Maybe, right? But that means that we'll see an improvement in the second half.
All right. All right. Thank you for sharing that. So I guess I just have a few more questions before we end. This one's a little more general, and aside from the things that we've talked about so far, are there any black swan events locally here in the Philippines that you are looking into? Is there something that can affect the
Renzo,
economy that
the nature of a black swan is you don't know it's coming, right? So
that's correct.
if we're anticipating it, it's hard. We've seen so many. It seems like a black swan seems to pop up a lot more often than they used to. That's for sure.
Okay.
I don't know. I mean, to me, yeah, I don't know. A black swan would be really nuclear, the nuclear option becoming real, and that to me is like, we have very little, you know, very little levers to pull. If that were to happen, you would have to be in cash, and I just think stay invested, number one, because I think that's always important to stay invested, be comfortable and confident in what you own, and one of the Warren Buffett adages, which I don't agree 100%, but it's good to remember, is that if you get stuck with something, at least get stuck with something that you don't mind owning for a while, because of market volatility or whatever dislocation is happening in the intermittent.
All right. All right. Thank you for that. So I'm just curious, how do you do your research and how do you look at news? Because when I look at a lot of investors, a lot of them are looking into the news, panicking, and when they see breaking news that things are going bad, they start selling. So how about you, Sir Philip? How do you read the news? Is there a specific routine that you do when you do your research?
Well, research, I mean, a lot of the research we do is direct with the companies themselves. So At ATRAM, we have analysts. We have analysts that cover sectors. So, for example, our property analyst will be an expert in the sector and very familiar with all the players, not just the companies, but the people that run them. So we are able to, for example, on any given year, we will have probably 350 to 400 meetings with companies throughout the year. These are one-on-ones in many cases, so we have really 1 hour, 2 hours to talk to management, understand what's going on, and constantly revisit the narrative we have of the company. So if we think of, the three-point rule, that you only have three reasons why you like a company, you constantly check that narrative, whether those things are still working out for you or not, right? And the only way to do that is really a deep dive with the companies themselves. Because an annual report, which comes out once a year, isn't going to tell you, it tells you a lot, but it isn't going to tell you everything you need to know every quarter, right? Every time they make an earnings report, you have to benchmark whether they're ahead, behind of consensus and our view. The only way to do that is really direct communication with the companies. Do we react to headline news? Sometimes, depending on the news, really depends, but not always. Not always, and not overreact. React is one thing, but overreact is what many people do. And that's where you get the displacement and the mispricing. For example, when the pandemic hit, back in March of 2020, our immediate reaction for the first 2 weeks was capital preservation, because we didn't know what the end game was. So even if prices were low, we were generating cash. We were trying to generate as much cash as we could. We're not doing that today. We don't think that's the situation today. We're not going capital preservation. We're tactically trading, yes, but that's very different than saying, I need to preserve capital, right? And so that's kind of the mind frame. Don't react to the news too quickly, because parang if it's in the news, it's too late na. Wala na. The price is, you know how it is, right? The minute it opens, it's down 30%. It's nothing you can do. Unless you sold the day before, there's going to be nothing you can do. So the next question is, what do I do from now? Do I hold or do I buy more? Right? Because if the stock's down 30 and you really like it, and it's down because of some headline news that might not even impact them, baka you should be buying the stock, not thinking of selling it. You know what I mean? So it's time also, Renzo. The other thing is, I know a lot of folks here are young. They're doing this for the first time, a couple of years. Just keep on doing it, because in 3 or 4 years, all of this volatility is going to feel very normal. And you'll know what to do. You'll react. It's like muscle memory, right? I remember that when this happened, I did this and it worked out, or it didn't work out. And the only way you learn that is by, school of hard knocks, as they say. Take some knocks and you'll be fine.
So just keep accumulating experiences and not giving up.
That's the number one.
Do you have any book recommendations? Because of course you have a lot of knowledge, and I'm assuming you.
I wish you warned me about this. I can't. Guys, I like. I mean, obviously Buffett has a bunch of books there that are always good core reading. The guy I like to read about when it comes to Asia is Jim Rogers.
Jim Rogers.
So he's an old-time investor in Asia, and I think maybe some of his ideas are a bit passé already, but the big concept ideas that he shared are pretty interesting for me. Um, I don't. There are very boring technical books about asset allocation and portfolio management that I also read. But I think for your guys, Jim Rogers is interesting. He's got a great book there, Bull in a China Shop, I think it's called. And then you can't go wrong reading a little bit about Warren Buffett.
All right, so I think we can bring this to a close. But before we do that, Sir Philip, do you have any final words or advice for those of those audience that are watching and
Well,
listening to us right
first of
now?
all, congratulate all of you that are on this call, because I think this is, we try to help. I mean, Ranzo and us, I think we're all trying to help all of you guys with your investment journey. Remember, it is a journey. It doesn't stop. I think even as a professional in the industry, you dream of retirement, but even while retired, people will still be stuck to this investing game. So even more when you're retired, I think. So keep going at it. I think we have an opportunity now that we're coming out of a crisis that doesn't happen often, and we have a market and companies that are good, very good companies that are standing on very solid footing, that have come through the crisis with balance sheets very much intact. And their prices are below their all-time highs. This is a great time to build a portfolio and stick with it. So yeah, I hope we can help in any way we can. We will provide product out there. We provide product at even 50 pesos an investor. So there's no excuse anymore that, ay, malaki yung minimum, di pwede, di kaya natin yan. Kayang-kaya yung lahat na yan. It's all available. And whether you want more advice or you want to do it yourself, there's so many ways to do it. But get involved, get into it. This is your markets. The future is bright for the country, I think. With all these young folks around, this recovery is going to be a strong one, and I think the market will follow as well. So onward and upward.
All right. That's the perfect way to end this conversation. Thank you so much, Sir Philip. I learned a lot from you, and I'm sure our audience did as well. So thank you for your time, and thank you for educating us all.
My pleasure, my pleasure. Have a great day, everybody. Be safe, be smart. Peace.
We Filipinos still have a long way to go when it comes to investing for the future. We seem to prioritize instant gratification, but I think how to invest properly is something that we all need to be familiar with.
It's simple, really. You work today, you invest, then leave better tomorrow.
Besides, investing shouldn't be scary, It doesn't have to be overwhelming. I mean, I started when I was a teen. I hope that I inspire my kids, that when they're old enough, they'll tell me that they're excited to do the same.
What's important is to find a good reason to invest. It becomes so much easier when you visualize your goal.
People think I travel so much, and I have a YOLO or you only live once attitude. But the truth is, I travel because that's my business, and I make sure I invest in it, spend time for it, to give people the best experiences they deserve.
When people find out that they invest for what I'm passionate about, they always say, "What?" But I always just tell them that I can afford to fund my passions because of my investments.
The thing is, some people are just too shy to ask for financial advice. Like asking for help is seen as a sign of weakness, when in fact, it's through asking that we learn the best way of doing things, even in investing. With ATRAM, you can engage and be confident that you have a partner in achieving your financial goals.
People usually think investing means buying a house or retiring. Sure, it can, but saving for smaller goals is another way to do it.
People think investing is expensive. Nowadays, even with a small amount of money, you can already begin your investment with ATRAM. It's easy to make it a monthly or even a weekly routine. ATRAM makes investing simple, even for busy moms like me.
And even if you're always on the go, like me, you can keep an eye on your investments online. Plus, I'm confident that ATRAM, my trusted partner, will take care of my portfolio and make sure it gets invested in the right place.
Never settle for average. Why? Because life is what we make it. And a strong investment partner can help us live the life we want.
ATRAM is dedicated to delivering an investment experience that helps people get more out of life. In fact, it was built with that single focus, to help clients attain their investment objectives. We see Filipinos invest in their dreams and aspirations. With ATRAM, building the future is a task we can surely take on.
With ATRAM,
You
Can take on tomorrow.
InvestaFest 2022 is brought to you by these major partners: ATRAM, To Trade Asia, and these other partners. Do not forget to share your experience and learning on social media. Use our official hashtag InvestaFest 2022.